Hi, let's take a look at the S&P 500 for tomorrow, August 15th, 2019. So here we had a sell-off today. As I've read, it was a 90% sell day, meaning more than 90% of the issues on the index were lower. And so therefore, we have a good chance that we are, maybe going to see one more flush down, but then we could get a turn. If we're going to see one more flush down, I want to point out that we made a lower closing low today. We had our low printed back here on August 5th, and our closing low, which wound up until today, was our closing low for the month of August and for Q3. But today we held above that low, but we took out that closing low. So to my mind, this is a head fake about us holding above these lows. I do think that we'll come down here and test lower. If we test lower, obviously what we're going to be looking at is our 2817 level. That comes to us from, we brought that in with us from Q4 2018. This is where all of the Q4 bounces failed at. They would get to about 2816 and change, and then roll over and fail from there. If we break down through that, cannot hold above there, then we have our 200-day simple moving average. I heard in the background noise today that the Dow broke its 200-day and broke its August low today. So if the S&P is just following a day behind, maybe we're going to take care of all this business tomorrow. Below the 200-day simple moving average is an uptrend that comes to us starting off the end of January and running through the June low and rising up from there. By my calculation, it's coming in at the high 2780 handle, 2785, 86, something like that. It's just a trend. A trend either holds or it breaks. We don't have to actually touch it. We could look a little bit below it, but in general, the 2780s need to hold, and we need to reverse off of there. Otherwise, I think you should just accept the fact that we're probably going to be going all the way down here to fill in this final gap that we left in our wake from the June bounce, and that runs from 2762 and change, and it fills at 2744. So this would be 100 points more to the downside. Okay, if all we do tomorrow is come in and do a little shallow lower low, maybe just a little look below, and then reverse and come back on the day to close at a higher closing low, closing above, have a rally on Friday. And timing wise, it makes a lot of sense too, because Thursday, the monthly options only trade through for the S&P 500, only trade through the close tomorrow, then they expire with the average open on Friday. So that's a good time for some games to be played where we have one sort of a close and then we have a ridiculously different open the next day, and it really messes up anybody who came in still long or short those S&P 500 options going in the wrong direction. One last thing I want to talk about before I close up this video, starting with this one back here. When we lost our 10 and our 20-day simple moving average on July 31st, this was the day of the Fed meeting. We had been holding, you can see right here, even this little set of lows coming into the last all-time high, always bounced off the 20-day simple moving average. And on July 31st, with that press conference and FOMC statement release, and that quarter point cut, we flushed down through both the 10 and the 20-day and closed below them as well. The next day on August 1st, we tried to take a look back above it, but failed and closed with a follow-through close below them. And at that point, both simple moving averages were curling over and rolling over and heading down, and they made a bearish cross on the third day, on the 2nd of August. And from there on out, we have never really gotten off the mat and recovered. I thought maybe yesterday, when we finally recovered the 10-day simple moving average for the first time since this move down below it on the 31st with the Fed meeting, I thought maybe that was acceptable. It's acceptable that, even though we failed clearly right at the 50-day simple moving average, that maybe since we closed above the 10-day, that would give us a reprieve and we would have our little bit of relief rally continue on through on Thursday today. But unfortunately, there was data that came out overnight from China and from Germany that just sent futures rolling over at about 3 o'clock in the morning. And from there on out, we just opened lower and sold and came into our sell-off for today. But also note what else. So now we've gone through all of these. We've gone through the 10 and the 20-day. We've gone through the 10 and the 50-day, and we've gone through the bearish cross of the 100 and the 10-day. If we don't get our shit together and get out of this tailspin soon, now we're going to start seeing the 20-day come down here and start crossing through these things. And we're going to get a 20-day, 50-day simple moving average cross, possibly even tomorrow. So if ever there was a time that there was going to be a manufactured rally where the algos treat these events as oversold rather than as sell signals, the sell signals that they are, it would be this Thursday and Friday for that to happen. Okay, there are articles in the blog that cover all of these subjects. They cover week 3 OPEX. They cover the phenomenon of closing lows and closing highs signaling exhaustion, which is what I think we could be. We've made a significant new closing low. If we make a higher close the next day, even with a even with a lower intraday low, that could really signal a great recovery for us. That article explains that, and then also the simple moving average crosses. Okay, the simple moving averages in general. There's one that explains all about the simple moving averages, but within the article, I explain the significance of these crosses, whether they be bearish or bullish. Okay, I hope this helped you out, gave you an idea of where we are, possibly headed tomorrow if we do head lower, and that if we close back above 28.40 tomorrow, that could be a good bullish signal for a strong Friday open. Have a great rest of your evening. As always, good luck and good trading.